Good day. So our next lesson is cash receipts journal. So cash receipts journal, this time from the word receipts. So previously we have our cash disbursement, which is the opposite of our almost opposite of our purchase journal. So this one is almost opposite of our sales journal. Take a look. So we have now cash receipts journal. Cash receipts journal is a specialized accounting journal used to keep track of sales of items when cash is received by crediting sales and debiting cash. So this one is for our general journal and the transaction related receipts, okay? So how to manage? So this one naman, manage all cash inflows of the business. So take note, if cash disbursement is outflow, cash receipts journal is inflow. So what's usual is receipt of cash from cash sales, receipts of cash from credit sales or credit customer or receivables, and then receipt of cash from other sources. Okay, like proceeds from loans, uh, payment proceeds from dividends, and others. So anything that would mean inflow. So as I said in our cash disbursement journal, so cash receipts and cash disbursement journal are only book, or these two are the books required if you are using the cash basis accounting. However, under PFRS and IAS, it states that only accrual is the recognized basis of accounting. Okay? So meaning if you use cash basis accounting, it would now be tagged as accounting. Okay? So how do it look like? It look like this. So you have the date, the particular, then the sales invoice or official receipts, because under BIR, sales invoice are for goods and official receipts are for service rendered. So you also have the folio. In some book, it's post reference. So you have now cash debit. Previously, we had cash credit. And then sales discount debit if the customer availed for or paid within the discount period. Take note that this is different from our trade or list discount, because trade and list discount is deducted from the sales itself. Okay, so it's not recorded. So you also have accounts receivable credit, sales tax payable if you are a battable enterprise, then you could put this. If not, you could omit this. Okay, if you are a battable sales, you had to have this because this serve now as your output VAT, wherein you would deduct all the purchase tax payable or the input tax to arrive at the VAT payable that you need to pay to the government. Next, you also have sales, and then the account, those that are not listed here for all the accounts that you had received. Okay? So let's now try the transactions. We have on January 18, sold merchandise on cash to Jane Company, sales invoice number 142, 19,742. Next, on January 20, collected the payment from Jane within the discount period under sales invoice number 143, 18,950, discount 1% when paid within 10 days, and no discount if you pay within 30 days. Next, on January 30, sold the old computer on cash to Melba Corporation for 5,000, invoice number 146. So how do it look like? It look like this. So let's first try those with VAT. So we have now cash sales. So we record the invoice. We don't put the folio or the post reference because you could see when we record this on our ledger accounts, subsidiary or general ledger account. So we also have cash. Since the amount of sale is 19,742, the no sales discounts because it was cash. It's not accounts receivable. Okay, and then we have now the sales tax payable. We divide it by 12 times 12, or sometimes it's already a breakdown, as I've shown in our sales journal. So you have 2,115.21, and then we have now our sales 17,626.76. But what if this is on account? So if this is on account, it's not recorded in our cash receipts journal. Instead, it's recorded in our sales journal. So this one is a collection of accounts receivable which is previously recorded in our sales journal. So 143, debit cash 18,742 760.50. Then we also have our sales discount because it was paid within the discount period. So 1%, it's 189.50. So our accounts receivable is still 18,950. You also have sold computer, 5,000. Take note, this is our not sales because you are selling your old computer. So you need to put the computer so that it would now be eliminated in its ledger account. It would be zero out. Okay? So if it's not a vatable sale, look at this one, cash sales, and just we record it as cash, 19,742, and then sales, 19,742. So two different things because this one, the above portion is a vatable sales, and the lower portion is not a vatable sales. But all other entries would just be the same. Another thing you could also entry here is the proceeds from loan or the dividend. Okay? So we now record it on our sales journal or on our general ledger. So we could record this one. General ledger, we paid on cash. Cash sales. So we have now cash, 19,000. Collection of cash, 18,760.50. And then sold computer, 5,000. So our cash would now be total of 43,502.50. Okay? If you total also the cash column, you would have the same balance. So for accounts receivable, I put in here the sales journal number 1, 48,865. And then remember, we also collect for the goods of AR. We also have, so the collection would now be 18,950 or 29,9150. Okay? So we also have our returns of goods. But take note, returns of goods are not recorded in our cash disbursement journal. Our cash receipts journal is recorded on our sales journal. Unless we need to pay for cash. Next, we also have the sales discount. We have collection of AR, 189.50. And then the balance is 189.50. So that you would be able to put that on our income statements to see what collections or what discounts did you avail. See? So those that are on the circles are those what we now put on our post reference or polio. Okay? So we have now our sales. So take note, the cash sales is the one that we record on the first line of our cash receipts journal. It's 17,626.76. Then we also have our tax on sales or the output tax that we could also deduct on our input tax or the tax we avail from our purchases. For our VAT returns, it's the second line or the first line also for the tax for vatable sales. You have 2,115.21. So the balance is 215, and the difference between your output tax and input tax would be the one that you had to pay to our government under the expanded tax law. So the one that encircle are the one that you had to put on the polio or the post reference number so that you would know that this particular item are already recorded in their ledger account, be it subsidiary or general ledger account. So if you like this video, hope you learned something, and if you like this video, please help me reach out more people by hitting the subscribe and the like button below. Thank you and God bless you. If you have any questions, comment below or please watch with me our premiere so that I could also talk to you. Bye!